the second quarter of 2020. The second quarter of 2020, and what clicked was a couple of things. We had a K-shaped recovery. Main Street was shut down. It's pretty, millions of people have lost their jobs. The economy's contracting. And then Wall Street exploded and recovered and hit all-time highs. And what I saw was
6 weeks later, right?
Yeah, financial assets were having the best year ever. People had great years. I mean, a lot of these hedge fund managers, they had the best year of their life in 2020 or 2021. Yeah. And Main Street assets were having the worst year in 30 years. And I had a company with $500 million in cash that was dead money. It was idle. It was generating 0% interest. The Federal Reserve said, we're not going to raise interest rates for 4 years. The company's stock was in the tank. At one point, in essence, when we were going through this, our company was valued at $60 a share in cash and $60 a share in the software business. And that was like 1 times revenue. And so, I looked at the world and I said, if the cash is dead money and if our stock is viewed as dead money, we've got a choice between a fast death, a slow death, or we ride out of the castle and we take a risk. Okay, the fast death is I just give the $500 million back to the shareholders in a dividend or a buyback. Now, I knew that wasn't going to save the company because I've been buying back the stock for the last 5 years. I bought $300 million worth of stock back or something. And the only thing that would happen would be the stock would go from $120 a share to $60 a share. And then all the stock options, the employees would be underwater. Then all the employees would get headhunted away by Amazon and Google and Facebook. And then we wouldn't be able to compete with Microsoft. And, we compete against a company which has more power than God, right? Microsoft, right? Every company on earth is their customer. They're more powerful than all but about a handful of countries on this earth. And they can do whatever they want, wrap it into their product, give it away for free if they want. So the challenge of giving up the capital was first we'd lose our financial capital, and then we'd lose our human capital, and then we'd have no reason to exist, and the company was gone to zero. So notwithstanding whether you care whether a company lives or not, I didn't see it in the interest of my shareholders to watch the stock go to $60 a share and then watch us slide. We'd have to sell the company. So the second strategy is hold the cash, but the cash is, cash trash. Ray Dalio says that is generating 0% interest. And the money supply expanded by 20% a year for the past 2 years. You can see it in U.S. single-family homes, which shot up 40% in price. And so if the money's being devalued 20% a year and you're generating 0% interest, you get a negative real yield of minus 20%. And I did the math in my head, and I concluded that pretty much the $500 million in purchasing power would be cut into $250 million of purchasing power in 36 to 48 months. So that's a slow death. I could use cash to pay my employees, but ultimately we were sitting and mired, and so that doesn't work. And so in that situation, we decided we should do something transformational. And if you went to a Harvard B School class and corporate strategy said, what are you going to do? The investors want the cash back. You can't generate a yield on the cash. The company needs to grow. Well, the answer is you do a transformational acquisition. So if I could have bought VMware, or if I could have bought WhatsApp, or if I could have bought Snapchat, or if I could buy like a super high growth digital monopoly or some moonshot thing that would go to the sky, then yeah, maybe that saves the company. But those are few and far between. Most of the time, these acquisitions that you do are dilutive. And I knew they're dilutive because, like Pete, it's not my first rodeo. I lived through this. I invented, I launched 12 different product lines to grow the business, and there were singles and doubles or whiffs, and I know that just innovating won't always help you. And then I bought the stock back, and I knew that didn't work. And then I spent hundreds of millions of dollars on sales and marketing to expand the business, and that didn't work. And so then I watched all my competitors, Business Objects, Cognos, every company, I watched them do acquisitions to try to grow, and every one of them failed in that strategy. There was a 99% mortality rate.
Wow.
the reason we're the biggest independent business intelligence company left is because the other 100 all went private, got bought up, got amalgamated, and sucked into the bowels of IBM and Oracle, and then dismantled over the course of 20 years. So I kind of knew, I tried everything for a decade. I knew it wasn't going to work from first observations. So I thought, well, what if I could find a digital gold, which was better gold than gold, something that is better than gold, but also a big tech monopoly. And here are my 3 criteria. I want it to be a better gold than gold, I want it to be a big tech monopoly, and I want no one else to appreciate it. I want it to be underappreciated. And that's what Bitcoin was in the second quarter of 2020. No one thought it was an institutional asset, even though Amazon stock had doubled in the second quarter. Bitcoin was trading about the same as it had been trading in 2018 or 2019. You know, it got up to 10,000, it had smashed down to 4,000, it was back at 10,000. So I looked at it and I said, well, you know, based on all the information, you would think that a digital property network or a global digital money network is more valuable, knowing that people are losing confidence in currencies, losing confidence in central banks, losing confidence in governments, and this is a non-sovereign, open, decentralized system. So it struck me that the fundamentals were good,
you would think
but it wasn't appreciated.
Yeah.
So we're there, we have to take a risk. We literally have to, or we got to sell the company, right? We're done, one way or the other. And I said, well, this is a reasonable risk because it looks like the Facebook of money or the Google of money in the year 2010 or 2011. While 98% of the world doesn't understand it, it's a bit too complicated, they're afraid of it. But just because you don't understand it doesn't mean it isn't true. It just means,
right.
You know, and I had the experience of riding the mobile wave.
Yep.
And I'm the guy in 2011 that bought Amazon, Apple, Facebook, and Google stock, you know, and they all worked out well. And I thought, the year's 2020, we're at the end of the mobile wave. You know, I tell a story of, you know, I tell a funny story in the mobile wave about my niece on a beach, and she's like, I don't know, 8 years old, and she wants the Big Apple. And I said, oh, you want to go to New York City? She's like, give me the Big Apple for my birthday. And I said, you want to go to New York City? She goes, no, I want the iPad. And I thought, okay, little girl wants an iPad. That means that the entire world wants this, and this is going to be a big deal, so buy Apple stock. Well, in 2020, I'm talking to the same niece. And I said, what do you think? And she goes, yeah, well, I just bought some Amazon stock. And like Amazon is trading at like $3,300 a share, you know, and it just doubled. I'm like, okay, well, if 20-somethings now know they should buy Amazon and Apple and Google, this is not a misunderstood technology trend anymore. Every Uber driver understands that.
This is like the 2001 .com bust, where every taxi driver back then was telling you what .com stocks they were buying.
So get off the mobile wave, get on the crypto wave, and think that through, and so that kind of made the decision straightforward. It wasn't without risk, but the alternative was pretty much throw in the towel and just either get beat to death fast or beat to death slowly. And so we got into this business at that time, and of course the last 2 years have been, I think, fairly good ones in terms of commercialization, institutionalization of digital assets.
Yeah.